So how to play earnings for stocks with technical indicators. Now, usually you need probably a combination of 2, 3 for a Confluence type strategy. Some will get you in early, but it always has to be after earnings, after the earnings reaction. You cannot guess what earnings are going to be. Yes, Tesla usually has good earnings and it goes, but occasionally it doesn't. So you need to wait for the earnings reaction. So this is TradingView platform. The chart is on a 195. Why is it on 195? Because exactly 2 candles per trading day is 195 minutes. Split that trading day into 2. This gives us a smoother price action to understand how a particular stock is going, and then how our trading indicators can work to identify those potential moves. So this is Tesla move. I've got the roller coaster, which is this purple strategy here. If I just hide the slingshot for now. Okay, so this is the earnings here at this point. Okay, the next candle at there, so that's okay, and then we go here, so 195. So the candle after earnings, we get a signal. You see the green arrow down here pointing up, and this is a roller coaster signal. So a signal at this point means we're going to go long after it breaches the high of that signal candle. So we use a stop market order. So the high of that candle there is, let's have a look at that high, 26210. So, you know, a 26230 or 40 or 50, something like that, would be your entry. Okay. Now, after the entry, what we do get, which is normal, is we get a little bit of a sell-off. It's profit taking. It's not a sell-off. A lot of people call this a sell-off. This is just profit taking from those that bought down here before earnings, that took the gamble, and they're looking for the quick win, and they're just getting rid of some of their position there. But in reality, this is a pullback here. It doesn't take the stop out for the trailing stop. But this is the situation where we add to our position here. We use the slingshot. So the slingshot identifies this pullback. Okay. It pulls back into the middle of these 3 zones here. So this represents a 80% probability in the middle zone here that it's going to go and hit target 2. Okay, that was a big candle, that signal candle. So the entry was actually above target 1, but you know, it's a big candle and it's a big pullback return here. You can smooth that out by probably going down to 78-minute type candles and stuff. But you know, in reality, this is where we are. We've already got some at this. So say we've got $1,000 worth of shares at that point. And then we've got an entry at this point here around 285.12. Again, the down below, we've got the Bias Depth Heatmap. It's on the swing trading setting. So with that first signal on the roller coaster, all 6 time frames, there we go, are all green. Then on the slingshot, all 6 time frames are green. So we've got entry here, $1,000 worth of Tesla. We've got a pullback. It behaves properly with the slingshot, pulls back into the pullback zone. We get a signal to go along with a type 1 buy. We add another $1,000 worth of Tesla at that point here. Now, all 6 timeframes green, so we're good. We've got $2,000 worth of Tesla, and we have an average holding position of around about $274. Let's just draw that line in there. So around 274 is our... going to go overly accurate, but there we go. Okay, so that's our holding position, average holding position. Got $2,000 worth. So there's 2 ways to manage this trade. For me, the more conservative strategy is with this trailing stop here for the slingshot. As you can see here with that roller coaster, it's a more aggressive strategy, and that takes that hour. But at this point here, I'm adding more shares of Tesla at this point because of the slingshot signal. So I'm going to revert back to this trailing stop at this point here. So this is where we are right now with Tesla. It's had a good move since earnings. We've played it well. We've got $2,000 worth of Tesla, if you like. We can, if I just move something out of the way, you can't see, but it's because I'm making the video. I'm going to measure this now. Okay. Currently, we're at about 48% increase on that $2,000. So we've made $1,000. Okay. That's not a bad trade. This went in at the end of October, and we are now on the 11th of December. So we're looking pretty good. Locked in wise, we have approximately, again, so we're going to adjust our trailing stop for our position at this point to lock in profit. We've got about 27% there. That's not bad. It's a good call. Again, you could use options with this type of strategy. You don't need to necessarily buy that physical stock. I'm not an options trader because I'm from the UK and we don't trade options. We trade CFDs or physical shares. So for me, it's always been physical shares for me, and this is just a prime example that the roller coaster can get you in early, but always look for those pullbacks after earnings. Earnings plays are always dictated to how many people not necessarily panic, but make that initial jump. Again, there's some gamblers at this point here think, looking at past results and saying, do you know what, I'm going to buy some shares here, Tesla before earnings, I think it's going to jump up. Once it does do that and they get that move, and that move from here to that point there is a 20% move. So they're probably happy with a 20% move. They start taking profit, but it's not where that majority of that momentum is. It pulls back and our software measures that pullback. That's why it's called a slingshot. Pulls back, slingshots up. Okay. Now we're just managing this with that. We could go more aggressive. We could look at the manager. Okay. If I put the manager on there, it's another piece of software, and all the links for the software will be down below for this. We can see we have a green ribbon on this point here. Now, there is training with the manager because these dots up above and below mean higher than average volume above or lower than average volume from below. So we can see with the manager, this actual pullback after that earnings was lower than average volume. That was normal profit taking. There was no need to panic. And again, the manager gives you that behavioral view of that pullback. And then even these pullbacks here, this is predominantly lower than average volume. We get a spinning top here, higher than average volume, but that was total indecision. Okay. And then we pull up, we pull back, lower than average volume, and then we're going higher again. The ribbon remains green. So here I've got the bias depth heat map for that confirmation. I've got the roller coaster for that early entry after earnings. And again, sometimes you may not get that, but 8 times out of 10, you will get some profit taking after earnings. And this is a good point then for the slingshot to measure that pullback and offer up a signal if there is one there. So, this is a 195 minute. Again, it splits the trading day into 2. Great for stocks traders. This is the TradingView platform. We do have the slingshot also available, and the roller coaster, and the manager, and the bias depth heat map for Ninja Trader. So we'll put those links below for the TradingView versions and the Ninja Trader version. So hopefully that helps for our stocks traders. Very simple strategy for those earnings plays.